Well, it is getting more expensive now to back loans. The Reserve Bank having hiked the repo rate by the 75 basis points. It will add more misery as consumers are dealing with rolling blackouts and exorbitant food prices. Let's discuss this further now. I'm joined by Economist Xhanti Payi and the Chief Economist from FNB Mamello Matikinca-Ngwenya. Mamello and Xhanti, good afternoon. Welcome to today. Thank you very much for your time. Mamello, can I begin with you? The whole interest rate hike was expected. I mean, no surprise there. It was a question of whether it's going to be 75 basis points or even possibly 100 basis points. And the governor saying 2 members of the MPC wanted 100 basis points.
Thanks, Dan, and good afternoon to all the listeners and Xhanti on the line. So I think it's quite clear that the SARB is very worried about the elevated inflation that we're experiencing locally. And it's quite clear that they would like to front load interest rates. And that, I think, in my opinion, that is indicated by the 3 members that have voted for 100 basis points worth of hikes. So indeed, the outcome was in line with consensus expectations and our expectations of the FNB. But it does suggest that the central bank will probably consider hiking interest rates further in the coming meetings. They highlight in the statement, Dan, that they view the risks to the inflation outlook to be on the upside. And further to that, they're quite concerned about what's happening globally and the implications that has had for the currency. So I think they will obviously be monitoring data as it comes in, but a very clear guide in terms of, that they're willing to do what is required to tame inflation.
Yeah, we saw a modest decline, though, in August in inflation. We did see that modest decline, but Xhanti doesn't seem to have mollified the MPC to say maybe let's give the South Africans a little bit of a breather.
I don't think so. I think one of the key concerns that they've had is that, one of, I was watching yesterday, as everybody did, what the US would do, and they were quite clear, the US was very clear that they would move very strongly in terms of their interest rates. And so when they delivered that 75 basis points, we also noticed that in countries like Japan that have not followed suit in terms of tightening, their exchange rates started to sort of fall out of bed. I think, Japan is seeing the weakest exchange rate in decades. And so I think that has been part of a big worry that the Reserve Bank has had, that, if you actually sit back and you don't act and you don't sort of follow the trend in terms of interest rates, what you'll find is that you may actually find the markets punishing you, markets leaving the South African environment. I think that has been a huge part of the big concern, because as we know, and as everybody has noted, that, interest rates are not particularly going to be able to contain the kind of inflation that we are facing. But if we do nothing, that could actually be detrimental going forward, because we could have actually inflation being sticky. As you just mentioned at the beginning, we have a huge problem with energy and the cost of energy that have been escalating and are expected to do so if the ESCOM hikes that they are asking for are to be believed.
Yeah. So come November, Mamello, you say we're going to get another hike. But besides we're beginning to see the decline in inflation, but it's modest. But we're also beginning to see a decline in food prices. And the war in Russia, Ukraine, although it's still going on, the impact is not as worse as people had anticipated. Now wheat is flowing. Those wheat vessels are flowing from Ukraine, from the Black Sea to the rest of the world. But that doesn't seem it's going to help us, because I guess our economy is not growing at the levels it should. That would be a concern as well.
Definitely, and I think, just I think reiterate what the SARB or the governor highlighted right towards the end of his statement, and it's not only in the statement, it's in a number of statements, that the SARB is worried about inflation expectations, and they want inflation expectations to be anchored. And right now, what we're seeing is that inflation expectations remain quite elevated. So you are correct that we are starting to see this moderation in inflation, and of course, the oil price, commodity prices are becoming more or less of a headwind. But I think if you look at the profile of the SARB's forecast, which is not too far from ours, inflation is expected to remain elevated. It's decelerating, but quite high, and only returns, I guess, comfortably within towards the midpoint in 2024. You are correct, Dan, that growth remains fairly weak, but the SARB has also adjusted their forecast slightly higher. So they highlight that there is a bit of resiliency from the consumer as well as private sector fixed investment, and we share the same sentiment that yes, growth is weak, but we have marginally upwardly revised our growth forecast.
But unfortunately, we're still smack bang in the middle of load shedding. Those blackouts are not helping, and they seem to be intensifying. I was talking to energy experts about this time yesterday here on the same show, and they are saying we should brace ourselves for more trouble beyond November, because all the measures that are being put in place will only bear fruit in about 2 years or so. With that, plus you've got a high cost of living, the pressure on households, and we know that a majority of our households in South Africa are women-headed. It's going to be very tough with now, with the loans are going to cost you more. Your repayments, if you have any, are going to cost you more. Xhanti?
I think that's really the sad part, of course, that that continues to erode whatever buying power that is in the hands of consumers. Of course, I think Mamello is quite right. I mean, we've gone through a really strong period of consumer spending, especially people buying houses. Cars have recovered. I know that people have talked very much about the buoyancy, even in the second car market, where there's a lot of demand, high prices there. So there is a level of that. But I think Mamello mentions also something quite important, which is this issue of inflation expectations. A lot of people, of course, part of that is that, a lot of people are looking at inflation. They're quite worried about it. They know what inflation it is, and they're demanding those higher salaries. Now, it's going to be interesting how that, goes on, because we know a lot of people are now going out there to increase more salaries. That should feed inflation. But again, as you've said, the growth is rather in a very tight spot at the moment. I was reading something that came up about agriculture being under a lot of pressure because of the electricity deficits that we face and the electricity crisis we face. Of course, we know these interest rates are not going to be helpful in terms of supporting the agricultural sector. We also know, of course, some of the problems, as you've just outlined them, in the pressure to consumers. So we, the times ahead are going to be quite difficult, and for some time to come. And of course, in the geopolitics and some of the problems that we faced, it seems that we still have instability for the foreseeable future in terms of the geopolitics. So one is quite concerned about all of these things coming together and what impact that will have, especially on the employment profile that we are facing.
Yeah, it doesn't seem like the Reserve Bank's MPC, all of them, they agreed. I think the discussion was whether it's 75 or it's 100, and they landed on the majority being at 75. But the pressure on households, Mamello, I just want to get your view there as well, from a banking perspective, but also as an economist, because now debt is going to cost more, credit is going to be more expensive, and people, as Xhanti says, buying power is going to be reduced. Should households be bracing themselves for a more austere environment in the near future?
So our view is that rates will continue to rise. So as I said at the beginning, we think that there is room for the SARB to increase interest rates at their next meeting in November, and potentially pause next year and gauge what the global environment looks like, and also the risks to the inflation outlook that they've highlighted if those materialize. But I think the point really is that, if we are correct in the increased interest rates to 6.75%, consumers are ultimately paying more for outstanding debt. And of course, these interest rates will permeate differently based on income levels. Certainly, people that are probably on the lower spectrum and that are exposed in terms of income and also exposed to credit will be paying more for any debt that they've incurred, whether it's credit cards, cars, and houses. And that's going to weigh on consumers. It's going to be quite heavy for them. We know that their purchasing power obviously is being eroded by inflation. So I certainly think that, on aggregate, the next coming months are going to be very difficult for consumers. But, if the SARB does manage to tame inflation, it then means that, in the next 24 months or so, consumers can look forward to interest rates that are slightly lower.
Thank you very much. That's Chief Economist of FNB, Mamello Matikinca-Ngwenya, and Economist Xhanti Payi, both of them weighing in on the breaking news of the afternoon, the rise in interest rates by 75 basis points as announced by the Governor of the Reserve Bank, Xhanti, just after 3 o'clock this afternoon.